Every time the world feels like it's getting more dangerous, markets don't wait for headlines to finish writing themselves. They move first. And when countries start drifting toward conflict, whether it's war, sanctions, or geopolitical tension, smart money makes a move it's made for thousands of years. It doesn't run to tech stocks. It doesn't run to real estate. It doesn't even run to cash. It runs to gold. Today, we're breaking down why gold becomes the world's financial safe haven whenever conflict rises, and why this pattern keeps repeating no matter how modern the world becomes. Markets love one thing above all else: predictability. Businesses can plan, investors can value companies, currencies can stay stable, but conflict destroys predictability, and you don't need to look far to see it. When the U.S. tightened pressure on Venezuela, sanctions didn't just hit politics. They hit oil markets, currencies, and entire regional economies. Investors didn't wait to see how it would end. They moved before the outcome was clear. And look at the recent tension over Greenland, a place most people never thought about before. Suddenly it's on the geopolitical map because of military positioning, trade routes, and natural resources. And the moment that happens, markets start pricing in risk. That's how fast uncertainty spreads. Wars disrupt trade. Sanctions break supply chains. Political tension weakens currencies. Debt rises. Inflation follows. And when uncertainty enters the system, investors stop asking, "How do I grow my money?" and start asking, "How do I protect it?" That's when capital shifts away from risk and towards safety. A safe haven asset isn't something that explodes in value overnight. It's something that holds value when everything else feels fragile. Gold fits that role perfectly. It has no CEO, no earnings calls, no political party controlling it, no central bank that can print more of it. Gold doesn't default. Gold doesn't get sanctioned. Gold doesn't depend on confidence in a government. When trust in systems drops, trust in gold rises. That's not emotion. That's history. Look at almost any major conflict period in modern history. During World War II, nations hoarded gold to protect national reserves. During the Cold War, gold became the neutral store of value between rival systems. During the oil crises of the 1970s, inflation exploded. Gold surged. After 9/11, uncertainty spiked. Gold entered a multi-year climb. During the 2008 financial crisis, trust in banks collapsed. Gold hit record highs. And in recent geopolitical conflicts, the same behavior keeps showing up. Fear rises, currencies weaken, and money flows into gold. Not because investors love gold, but because in moments of global stress, gold becomes financial gravity. Everything falls toward it. A lot of people think safety means holding cash. But in conflict periods, cash quietly loses power. Governments spend more. Debt rises. Central banks print to stabilize economies. Inflation eats purchasing power. So while your bank balance looks the same, what it can buy keeps shrinking. Gold works differently. It doesn't promise growth. It preserves real value. It doesn't pay interest, but it protects purchasing power when interest rates fail to keep up with inflation. That's why central banks themselves, not just investors, are some of the biggest gold buyers during times of global tension. When governments prepare for uncertainty, they prepare with gold. Today, smart money doesn't mean abandoning stocks or living in fear. It means hedging reality. When geopolitical risk rises, professional investors rebalance. A little less risk, a little more protection, a little more gold. Not because they expect the world to end, but because they understand one simple rule. You don't prepare for storms after they hit. You prepare before the clouds show up. History doesn't repeat itself exactly, but it rhymes. And one of its most consistent rhymes is this: when nations move toward conflict, when uncertainty shakes confidence, when markets stop trusting promises, smart money stops chasing returns and starts protecting value. And for thousands of years, that protection has had one name: gold.